Hey guys, welcome back to Valareso Capital. On this week's episode, we're gonna go through the market reaction that we had on Friday. We're gonna go through the price action that we saw after the data release. And also remember, what is really important is to understand that the release that we had, the numbers, meaning the numbers that we had on Friday, are actually not that important. What is important is the reaction to the data release that we had. So we're gonna go through that, and we're also gonna go through some very important levels, both of resistance and both of support of many of the names that I'm watching, and also some of the volatility instruments that we tend to cover here in the channel. So if you wanted to know what are going to be those levels, make sure to stick all the way to the end in this video. That way you can have an understanding of what is going to be the expectation and the probabilities for the next move in the market that are going to happen next week. So once again, guys, thank you so much for being here in the channel. Make sure to like and subscribe. That way more people can find this information and also use this information as an asset for their trading analysis. So let's just jump really quickly here. Let me make myself a little bit smaller so that you can actually see the charts. And for you guys that are new to the channel, I watch two main indicators in my charts. So the first indicator in the bottom is going to be the TTM squeeze. And this indicator basically helps us identify the probability of a strong directional move in the market. And the one that I have in the top is the trend oscillator, and that basically helps me identify what is the probability of a move happening to the short side or to the long side. So first of all, we're gonna start with one of my favorite indicators, which is the VVIX. And many of you guys that are frequent followers of the channel, you know that the importance of this chart basically comes from its relationship with the VIX, meaning that these help us identify what are the probabilities of the volatility in the VIX expanding or contracting. So basically, when the VVIX is starting to trend to the downside, is anticipating some contraction in the volatility of the VIX. In simple terms, if this instrument is in a downtrend, we're most likely gonna see a move to the upside in the indexes and the general market. So let's start here with the important levels of support and what are my indicators telling me about this instrument in particular. So first of all, I want you to notice one important thing. We have a squeeze that is actually firing to the downside. When we have a squeeze that is actually firing to the downside, that means that the probability of this move continuing to that side of the trend is actually pretty high. And then you can see right here that the trend oscillator is below the midline, meaning that is below 50, and is also below the EMA, which is the red line in the indicator. So when the trend oscillator, and the trend oscillator is the white line, is below the EMA turns red. That's basically just an indication that the probability of a continuation to the downside is higher than a reverse in the trend. So that's basically what that indicator is telling me. And then if we see price action, you can see that we actually had an attempt of a rally right here in the VVIX, and that actually found resistance at some of the key moving averages that we have on the chart. That is the 21 exponential moving average and that 30-day moving average, which is the pink line in the charts. You can also see that we have a sell signal that is active. And if you actually study Fibonacci, which I recommend that you do, you can see that we have a 0618 retracement level that acted as resistance. This level was measured from this high right here all the way to this low right here, and you can see that we actually had an attempt to rally, but we found resistance right there at that level, and then we're starting to see a continuation to the downside. Now, what is this telling us? This is basically telling us that the VVIX, at least for now, is starting to see a little bit of a downtrend. Now, these downtrends in these volatility instruments, they don't tend to last for a while. However, when we start to see some of these indicators moving below the moving averages, that's when we see a little bit of a continuation in the upside of the indexes. So basically, as long as the VVIX continues to be below this 21 exponential moving average, the probability is favored for a continuation higher in the indexes. And of course, let's just take a quick look at the VIX. That way we can understand the relationship between the two, and we can also confirm the move that we're seeing in the VVIX. So here's the VIX, and you can see right here that I was actually expecting for a move higher in the VIX, and the reason why I was expecting that is because the VIX, you can see right here in this candle, was starting to hold the 21 exponential moving average and also some of the moving averages that we have on the chart. Now, of course, that didn't happen. You can see that that actually the VIX found resistance once again at that 50 daily moving average, which has basically been a wall for price in the VIX. You can see that we found resistance again, and this basically broke below the moving averages, confirming a move to the downside. And you of course can see that the trend oscillator was below 50 for the entire move, so that was also a confirmation that the probability of seeing a move higher in the VIX was actually not that pretty high. And you can also see that we have a squeeze that is pointing to the downside. Now I do have a trend line that I think is going to be really important here, and it's basically this trend line right here. So the expectation here in the VIX is that if we happen to find resistance, probably we're going to have a little bit of a rally, but then probably we're going to see a continuation to the downside. And if we actually see an open below this trend line, I think we're going to have a really strong move to the downside in the VIX, and then a continuation to the upside in the indexes. So basically the levels that I'm going to give you for the VIX is going to be this 2086 level, which is basically going to be that level right here in the trend line, and also in this mini gap that we have open in price. So basically, if we open below here, expect a continuation to the downside in the VIX. Now, before we jump in the indexes, I think that the best way to use our time here is just to cover the leading sectors in the market. So let me start with the DIA right here. The Dow Jones has been basically one of the leading sectors in the market, and you can very clearly see that while the S&P and the QQQ, even the IWM were trading below their key moving averages, the Dow Jones was actually holding above that 200. You can see the 200 daily moving average, which is the blue daily moving average in my chart. And also, most importantly, you can see how well the trend oscillator was holding above this 50 level. You can see that we actually had a dip just below it, right at 49.41. But we were actually holding this level, meaning that we were actually keeping that bullish structure, and the probability for this, basically for this consolidation to fire to the upside, was actually higher than a break to the downside. So that's actually what we saw. You can see that right here we had a really strong move back above 333.82. And you can see that we're also back above that 30-day moving average, which is the pink line that we have on the charts. Now, the expectation here for the DIA is a continuation higher. I think that if you want to trade this, a really simple way to trade it is just keep a stop below this candle that we have right here, below this bar. And then let's just see how it goes, right? My expectation is that at least we're gonna try to test this level right here, which is somewhere around 345. And then perhaps we're going to see a little bit of continuation even above that level. But the first move that I'm expecting is a retest of this high right here. And then perhaps we're going to see some pullback before a continuation higher. But this chart is looking bullish for the moment. Now let's take a look at some of the other indexes. And we have to understand that the weightings of the DIA in terms of sectors, we have a lot of tech. But most importantly, we have a lot of healthcare, and we have also a lot of financials, meaning that we have a lot of XLV names here and a lot of XLF names here. So if we take a quickly look at XLF, we can see that this is actually also a pretty bullish chart going into next week. Why do we call this a bullish chart? First of all, we have an active buy signal right here that was triggered as soon as the trend oscillator recovered that 50 level, and also you can see that price reclaimed the 30-day moving average. So the moment that we have here, we know that the probabilities of a continuation higher in the XLF are higher than a continuation lower, and that's exactly what we saw on Friday. You can see that we have a really strong power bar moving all the way to the upside. You can see that we actually closed above the 0618 retracement measured from this high to this low right here. So the expectation for next week of XLF is for us to see a continuation higher. You can see that we have a squeeze, we have the trend oscillator back above the midline, and you can see that the way that price interact with those moving averages was actually pretty bullish. You can see that we actually held that 21 exponential moving average, and then we saw a really strong continuation on Friday. Now the expectation here is for us to continue to hold the low that we made on Friday. You can also see that we have a trend line right into this level. We actually held that trend line. So the expectation for this setup to be valid is that we actually hold this level right here, and then we see a continuation higher all the way to that 1272 extension measured from this high right here to this low right here. So that's gonna be the expectation for XLF. You have to understand that XLF has a high weighting on the DIA, as we just mentioned, and that also gives us a higher probability for a continuation higher in the DIA as well. And then let's take a quick look at XLV, which is also a high weighted ETF in the DIA. You can see that this one is not as clean as XLF. However, you can see, let me just go right here. You can see that we are actually holding this breakout level right here. So you can see that we had a pretty strong breakout in XLV. Then after a consolidation here for a little bit, we actually broke kind of this channel, and now we had basically a strong move to the downside. However, we are still holding this level. So this is actually a pretty bullish pattern going into next week. You can also see a confirmation of the trend oscillator and also a confirmation of the squeeze, which is actually trying to move a little bit higher. You can see the switch of momentum right here that we had on Friday, and you can see this very strong power bar that we had. This is actually what they call an outside bullish bar, because we actually take out the lows of the previous day and we actually finish at the highs of the day basically. So this one, you can also, I think that an easy way to trade XLV right here is gonna be to have a stop right below this bar and then look for a continuation into this first level of resistance, which is gonna be the 0618 retracement measured from this high right here all the way to this low right here. Then perhaps we're gonna see a little bit of a pullback before a continuation higher, and that way we're gonna start to interact with these moving averages in a more bullish pattern. So this one is actually looking pretty bullish. And then those are gonna be the sectors that are basically quickly related or more directly related with the markets. However, some other two sectors that I want to show you are going to be the KWEV, which is basically the Chinese ETF. This Chinese ETF, don't expect this ETF to trade directly with the general market. Sometimes the Chinese stocks, they just do whatever they want to do. However, I do want to call this setup to your attention because I think it's a really strong bullish setup going into next week. You can see right here that we have basically a breakout from this cup and a handle pattern right here. You can see the strong move that we have to the upside. You can see that we have a squeeze that was pointing higher. We can also see that we have a very bullish trend oscillator pattern. However, this is starting to get a little bit extended. If we happen to see a pullback going back into those moving averages, basically retesting this breakout level, the same as we had with XLV, then probably I'm going to be a little bit interested for then a continuation higher. And then lastly, I'm going to show you GDX, which is basically the gold miners ETF. And you can also see that we are starting to see some really nice moves to the upside also in GDX. You can see right here that we have the trend oscillator finding support at that EMA. You can see that we actually have a trend, that we actually have a squeeze that is starting to fire to the upside. However, you can see that we are a little bit extended from these moving averages. If you were able to build your position around these levels, then you can see that you're starting to see some really good rewards from those positions. But in my style, I'm going to be waiting for a little bit of a pullback into those moving averages before a continuation higher into this extension right here of 32.25. So that's basically what I'm seeing in the market, guys. I do think that we're going to see a little bit of a continuation higher. My focus right now are going to be the ETFs that I just showed you. If we happen to see a move to the upside, I think that these sectors are the ones that are going to move the cleanest to the upside, if we can put it into those terms. You, of course, can trade tech. However, tech continues to be in a downtrend. And even if we see a bounce in the market overall, those bounces in, let's say, Apple, Tesla, basically the QQQ in general, are going to be bounces into resistance. So I think that if we want to put probabilities on our side and we just want to focus on the most bullish setups that we have right now in the market. So that's gonna be basically everything for this week video, guys. Remember to be really remember to be ready to adapt to changes in the patterns, right? Because as we saw last week, where we were actually expecting for a continuation lower, we actually did had a continuation lower at the beginning of the week. However, after the report on Friday, you can see that we are actually seeing a lot of changes in the structure of the market. So always be aware of that, always be ready to adapt to those changes, and that way it's going to be easier for you to find bullish setups or setups that go with the trend, and then you can profit on those opportunities. So thank you so much, guys, for watching. Once again, remember to like and subscribe, and also remember to follow me on my Twitter account. That way you can see the setups that I post on a daily basis, kind of more on a real-time fashion, right? So thank you so much, guys. Again, have an amazing weekend, and I see you on the next one. Bye bye.